Well, I think a lot of people will criticize money managers and say, look, value investing should encompass growth. And I agree. But growth became momentum investing, as you just mentioned.
Yeah.
And so I think that's been the big issue. But look, if you look at a graph of growth versus value from 1975 until the global financial crisis, value generally outperformed growth with periods of dramatic growth outperformance. But generally, value was outperforming for a long period of time. Since the global financial crisis, growth has outperformed tremendously with small periods of value outperformance, particularly 2022 and 2023 prior to the downturn last year in value versus growth. Once again, I just think that over the long run, we take an intrinsic value approach. Intrinsic means unto itself. We're not buying something that's cheap relative to the market. We're buying something that we feel is cheap on an absolute basis. And if you do that, you also protect your downside quite a lot. And I think growth and value you tend to get these big readjustments in markets like this, in markets like 2022, when you have these big downdrafts, and value tends to hold up very well in those downdrafts. And all of a sudden people look back and your 3-year numbers and they go, wow, that's not a bad number. Well, yeah, because in 2022 we didn't lose our shirt like a lot of growth managers did.